Okay, so we've explored the potential impact of a second Trump presidency on Tesla, the energy giants, and even the crypto world. But what really stuck with me was the article's emphasis on understanding a leader's intentions and how that can inform investment decisions.
I agree. That was a particularly insightful takeaway. They argue that investing doesn't always have to be this incredibly complex, data-driven endeavor. Sometimes simply understanding the basic intentions and priorities of a leader can provide valuable clues about which industries or sectors are likely to benefit.
It's almost like a back to basics approach. Don't get lost in the weeds of financial models or technical analysis. Step back and ask,
Mhm.
what is this leader trying to accomplish? What are their core beliefs? Then look for the companies that align with that vision.
Exactly. And to illustrate this point, they look back at the top performing stocks in 2017, the year following Trump's first inauguration. What's interesting is that 3 out of the 5 top performers, NRG, Energy Wind Resorts, and Boeing, were companies that directly benefited from Trump's stated policy goals. Whether it was reducing energy costs, implementing tax cuts, or fostering close relationships with specific companies, those companies aligned with Trump's agenda and their stock prices reflected that.
That's a compelling observation. It suggests that while, of course, you can't predict everything, paying attention to a leader's pronouncements, their actions, even their personality, can provide insights into potential investment opportunities.
Of course, it's not a foolproof strategy. Not every campaign promise is kept, and unforeseen events can always throw the market a curveball. But it's a valuable framework for thinking about how political shifts can create ripple effects throughout the economy.
So if we apply this lens to Trump's current platform, what are some of the key themes that stand out to you? Where might investors look for potential opportunities based on his stated priorities?
Well, one thing that jumps out is his clear preference for traditional energy sources over renewables. He's talked a lot about reviving the coal industry, expanding oil and gas production, and reducing reliance on solar and wind power.
So they could mean a continuation of the potential boom we discussed earlier for companies like Kinder Morgan and Halliburton, but potentially a tougher road ahead for companies focused on renewable energy.
Precisely.
Okay.
And he's also signaled a desire to reduce regulations and taxes across the board. This could lead to increased profitability for certain businesses, but also raises questions about potential impacts on consumer protection and environmental regulations.
It's all about weighing those potential benefits against the risks. And ultimately, the article reminds us that staying informed and being aware of how political decisions can impact the market is crucial for making smart investment choices. It's not about blindly following predictions, but about understanding the forces at play and making informed decisions based on your own assessment of the risks and opportunities.
I couldn't agree more. And, it's refreshing that the author Tom Young takes a moment near the end of the article to remind readers that investing doesn't always have to be this high stakes, hyper complex game. Sometimes simplicity can be key.
I love that point. He encourages investors to avoid overthinking and instead focus on understanding the big picture. What are the major trends shaping the market? What are the motivations driving the decisions of those in power? By grasping these fundamental elements, even individual investors can make shrewd choices.
It's about cutting through the noise and getting to the heart of what's really driving the market. And, it's so often that the world of finance seems shrouded in jargon and inaccessible to the average person. But Young reminds us that investing can be grounded in common sense and an understanding of basic economic principles.
It's about connecting the dots between political decisions, economic trends, and individual companies. It's about recognizing that markets are not driven solely by numbers, but also by human behavior, by the hopes and fears of investors and consumers alike.
This brings us back to the article's emphasis on understanding a leader's intentions. It's not just about deciphering policy pronouncements, but about grasping the underlying motivations and priorities that shape those policies. Why are they pushing for certain policies? What are their ultimate goals?
And the examples of the top-performing stocks in 2017 illustrate this point beautifully. Those companies that aligned with Trump's core agenda, whether it was energy deregulation, tax cuts, or personal connections, were the ones that saw the most significant gains.
It's a reminder that markets are not purely rational entities. They are influenced by emotions, by narratives, and by the perceived intentions of those in power. And by tuning into these often overlooked aspects, investors can gain a valuable edge.
It's all about piecing together the puzzle, considering both the quantitative and the qualitative factors at play. So as we wrap up our exploration of this insightful Investor Place article, what are some key takeaways for our listeners?
Well, first and foremost, remember that political events can have a profound impact on the market. A change in leadership, a shift in policy priorities, these can create both opportunities and risks for investors. Staying informed and paying attention to the potential implications of these shifts is crucial.
Absolutely.
Yeah.
And second, don't underestimate the power of understanding a leader's intentions.
Mm.
What are their goals? What are their priorities? By aligning your investment strategy with those underlying motivations, you may be able to identify companies or sectors poised for growth.
And finally, don't overcomplicate things. Sometimes the most straightforward approach is the most effective. Focus on the big picture, grasp the fundamental trends, and invest in companies that align with your understanding of the market landscape.
So we've explored this article's take on a post-election market. What stood out to you as particularly insightful or surprising?
I think the emphasis on understanding a leader's intentions is crucial. It reminds us that markets are driven by both economic factors and human psychology. The article's choice of companies is interesting as well. It highlights how different sectors could be impacted by political shifts.
Agreed. And for you, dear listener, here's something to ponder. How might these predictions change if global events like the ongoing conflicts mentioned in the article escalate? Investing always involves risk, but understanding the potential influences can help you navigate those complexities. Keep exploring, keep questioning, and remember, knowledge is power. Until next time on The Deep Dive.